This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, November 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. No overnight markets here. We're going to have a hard open in about 15 minutes, so we'll jump right in. We've got a couple of export sales announcements here this morning. 312,000 metric tons of soybeans to China. That was for 25. Also announced 273,988 metric tons of corn. That was to unknown for 25. We also got a weekly export sales report. This is for the week ending 10/16. Real solid on the corn side. 2,822,600 for old crop, 571,500 for new crop. So both were better than expected there. On the soybean side, also pretty solid, 1,108,000. Wheat was kind of lower end, right below the lower end of the range at 341,300. Real solid week for meal. Meal sales at 543,100. That was above the upper end of the range there. And also on the oil side, it was solid, 19,100. Upper end was looking for a number close to 25. So that's pretty good there. Guys, jumping right in, Secretary Ryland on Wednesday highlighted in a podcast that the next round of farm payments should roll out the early part of January. That's going to follow what is supposed to be the announcement, I think, early next week for what those payments are going to look like. So I know early next week we should have a little bit of guidance. Everybody's looking forward to that. We did get through deliveries. Looks like from my report, we had about 80 corn, 447 oil, 199 meal. So with that, Dustin, maybe share a few thoughts here as we trade a shortened day, and then we'll throw around the room.
Yeah, we'll see how the market opens, but CGB delivering 80 corn, for Naples is that was the only registration. So it'll be interesting to see how the market reacts to that. We are at a pretty high interest rate still. I know there's a ton of demand for corn on the river, but the fact that we are seeing some deliveries at least, that kind of helps explain some of that weakness we saw in the Dece March spread on Friday, or on Wednesday. Feels like a Monday, right? Coming out of the holiday.
Every day has so far.
But, this is what the markets are going to, it's kind of a commercial game now. December CBOT products in the delivery window. So just kind of curious what happens. I mean, we've talked about it a lot in the letter. SEPDECE, which is 91 days, went off past full storage costs. So we had like 24.5 cents on that first notice day going into that. That's about 8 cents in CME warehouse receipt costs, and yet here we are going into the same type of a period, the 90-day period from Dece to March, and that spread is only 14.5 cents going off on Wednesday. So it's a big demand number, but when we're talking about maybe 1 billion bushels more than we've ever had as of December 1. I think it's still a flow problem. And when you get to the commercial game, once you get kind of past this like early demand and you get into like the first lockup strength that you typically see, you're still going to have, like, I think, a wall of corn coming that needs to be turned into cash after the first of the year. It doesn't mean the market can't go up, but I think that we would see that at least in the spreads. So that's still my personal opinion, is that if there's any strength, it's going to be support. It's going to be held at the back end of the market because natural rotation is moving away from corn back to beans because such a big corn acreage year. And then the cost of inputs are just so high. Corn's an expensive crop. If we are really tight, but we can easily meet that demand with enough supply, we need to convince the globe, not just U.S. producers, to keep planting corn, into that new year. So I think DH26 corn, could actually be better supported, for example, than March 26 corn, in my personal opinion.
Very good. Kind of interesting to see. So there were rumors floating last week that post the conversation with Xi and Trump, that anywhere from 10 to 10 of beans get purchased. We get a 312,000 announcement here this morning. So that would essentially be half of what anybody was talking about, from a announcement perspective. Not to mention, we're still dealing with all the pre-lockdown sales reports and whatnot, the clown show that is. So I guess, next week you should start seeing some pretty big sales announcements if we're going to get on track to hit this number. And we talked about it quite a bit, but
yeah, the market may be skeptical about that, and that might be built into this recent weakness that we had. It is a hard time of year to go source a bunch of beans from growers or just the market in general, post-harvest. It's just kind of, it's a hard time of year to not influence markets. So if they do start to perform, then yeah, beans probably, like I think Justin mentioned this last week, will probably have some more support if we start actually seeing them fulfill the contracts. If they don't, or they're only kind of halfway where they think they should be, has the market already priced that in, is the question,
Yeah, it was interesting. I read a story this morning that China called out a couple of the larger commercials that bean shipments coming from Brazil didn't pass quality standards. So you wonder if there's a little bit of gamesmanship going on there now that they're, buying from the U.S. and they need an out, if you will. It would be interesting to follow that,
Yeah, I mean, they've got really good caveats there, like, oh, you got some non-GMO dust in this load, we can't take it, so.
Very good. Ben, what's on your mind this morning?
Encouraging bounce there in corn on Wednesday. Hope to see some follow through on that today. When you look at March corn, pretty low volume pullback that we had, and pretty nice day on Wednesday. We got below the 50 and we tried the 100-day on that pullback heading into first notice day. And here we sit 4 or 5 cents away from the 200-day moving average. I think that's, with delivery out of the way, maybe we have a crack to overcome that now. It'll take continued strong exports. I think the window is good here. We get out of this period and we don't have to deal with another delivery period until March. So trying to remain cautiously optimistic, but I think we need to see more than one day following that period than to be more encouraged about it. I think it's interesting that when we've struggled with a lot of when you look at longer term timeframes as well, the weekly and the weekly 50 week and the 200-day are basically at the same level. So that 52 to 53 is going to provide some, at least short-term resistance, I would think. Soybeans, all of a sudden, if they suck the ball out, it doesn't feel real good. In a week or so, beans will go into their roll period, and I don't expect too much on that. It's Jan to March. But the market hopefully is encouraged by seeing some sales, but I think we're going to have to see them every day in order to keep any sort of momentum going here.
Well, very good. We've got a couple of minutes here, Ryland. Let's move over to Livestock. Heck of a bounce there on Wednesday, kind of coming off of a pretty bloody start to the week. And cash hogs looking to firm up a little this week and kind of got a little bit of a bounce also Wednesday before the pause. So I guess what are your thoughts here as we start the morning?
Yeah, so we got a little bit of cautious optimism here. I mean, I think you got a little bit of a technical kind of support kind of bounce overall, but the high side in cash being around 210, I think we're still waiting for some cash trade to pick up here in the south, but I think the damage has kind of been done for the most part. So I think that there's just a little bit more kind of bottom picking here right now from a speculative standpoint. Obviously, we're not out of the woods yet, but last week, or at least on Wednesday, it looks like Secretary Rollins may have cooled some of the nerves here just by stating that the border is not going to reopen anytime soon. So maybe we're seeing a little bit of that kind of translate as well. So would like to see a firmer open this morning just on that alone. I think we've had a decent chunk of short covering here just over the past 2 days, maybe see a little bit more follow through now, especially if we're expecting kind of Southern trade to kind of hang in there. And yeah, on the hog side of things, we are finally starting to see some upward momentum in cash. We were up $1.85. We're at 73.57. Obviously, the trend is still kind of negative here, but I think we're going to see a little bit of a seasonal bounce, especially post-holiday business. So we did see things like the carcass firm up, was up $2 at 94.25, and belly's up $1.22. So obviously, it may be a little bit too soon to call for a bottom, but generally just some good optimism coming here. So our calls are about 50 to $1 higher here this morning in the meets.
Very good. We made it through this short holiday week. Brings us to everybody's favorite time of the week, and that's Fun Fact Friday with Brian. What do you got for us, buddy?
You guys got me okay?
Oh, loud and clear, my man.
All right. Happy Friday, everybody. And since it's Black Friday, I thought it'd be fun to look at some ads companies use to sell their product. Let's start out with AIDS, reducing plan candy. Why take diet pills when you can enjoy AIDS? This company only lasted from the 70s to the 80s, obviously, because the AIDS epidemic came out and that company just went completely downhill. Coca-Cola, 1905, Germany. Coca-Cola has cocaine in it, which makes it refreshing. Really leaning on the cocaine aspect of it back then. Reach for a Lucky instead of a sweet. This targeted women. Why eat candy when you can just smoke? So that was a 1930 ad for the Lucky Strike.
Good point.
And 7-Up in the 30s and 40s. 7-Up for babies helps with infant colic. Ad actually showed mothers giving infants 7-Up because of the lithium back then in 7-Up was supposed to cure baby colic. So, and then lastly, I'll leave you off with Dr. Koch's Cure, late 1800s. Cures cancer, consumption, and all other diseases. It was just water, but anything goes back then in the 1800s. So have a great weekend. Enjoy. Hope you're enjoying your holiday weekend, and we'll go from there.
Well, it's amazing. We're worried about Tylenol. They're giving kids lithium. So
I mean, I'm sure it worked.
How far we've come. I guess, Ben, Dustin, throw Jason, anybody, throw us some opening calls here on the greens. What are you thinking? Jace, what are you calling it this morning?
Yeah, it looks unchanged, maybe a touch lower. All the bids and offers are all kind of lining up to where we closed on Wednesday. So we'll see.
All right, pretty quiet. It's going to be a short, quick session. We're going to open here in 2 minutes. We're going to close it down at 12:05. So anybody that needs anything, be sure to get in touch with us before the weekend. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. Good show. Hope everybody has a great weekend, and we look forward to talking to you again on Monday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.